on, and let's get our market conversation going with Rushabh Sheth, who's the Co-CIO at Karma Capital. Thank you so much, Rushabh, for joining us, and good to have you back on ET now after a while. And while we've interacted for a while right now, if you look at the way how the markets have actually panned out, we saw Trump take over, then you saw the tariff announcement, you saw the markets correcting, then you saw markets rallying back. How are you actually digesting all of this news flow, given the fact that, yes, there's a 90-day pause, there are a lot of trade talks happening at this point in time? How should one gauge the entire market and plan, strategize at this point in time?
Thanks for having me here. Never a dull moment in the markets, as they say. So our sense is that there's been a lot of motion, but not too much movement as we've seen in the markets because of various announcements, and that's basically a short-term view of the markets in terms of reacting to every news which comes in. Our view is that there is a 90-day pause, and we'll kind of hopefully, at least from an India perspective, get some kind of a deal in place before the 90-day period ends. So from an India perspective, we are hoping that that's kind of puts to an end this whole uncertainty regarding tariff, at least partially, if not fully.
Right. Rushabh, what's the strategy that investors should adopt right now? Because pretty much start of the year, October actually, when the correction began for Indian markets, many actually started off the year with a fair amount of dry powder. April or last month gave you kind of that confidence. The market, of course, recovered from those March lows. FIIs have been coming back, and now you've got a big tailwind in crude cool-off. But just wondering whether Indian investors should still be a little cagey, or should you now be all into Indian equities, if you're not already?
My sense is that it'll be a stock pickers market. I think you're not going to see a big move in the market. I think it's going to be a sideways consolidating market for some time because there's still a lot of uncertainty around. Economy has slowed down, and clearly we don't see the significant recovery in the first half of FY26. I think it's only going to be in the second half, post the monsoon, that you'll start to see some sort of a recovery coming back, and that kind of helping earnings in the second half of the year. So my sense is that you're going to have a sideways market, consolidating market. It's going to be stock pickers market. You kind of have to pick and choose. So I'm saying from an investor perspective, it's going to be more challenging. I think staying invested over time is always been the right strategy, and being selective about what you do in terms of, we're not going to see a broad-based market like we have seen in the last 4 or 5 years post-COVID. I think it's going to be a more narrower consolidating market, and therefore there's going to be more challenging to kind of make money. But there will be, according to us, a lot of opportunities as markets consolidate and correct. You see more and more opportunities opening up. So since October, as you mentioned, we've seen significant corrections in small and mid caps. We still believe that maybe there is some room to go, but there are very interesting opportunities also opening up.
Interesting you say that, Rushabh, and that was going to be my next question. What do you do then when the market does give you that ripe, opportune time? Do you buy more of the same? I mean, select banks, consumption via premiumization, select autos, etc., or do you look for newer horses?
No, my sense is you'll have to look for newer kind of ideas. My sense is the kind of growth we will see over the next 4, 5, 6 years, the color might be very different from what we have seen. So very different set of businesses will do well in the future as compared to what's done well in the past. So, looking in the rearview mirror and betting that betting on the same house might not work. You'll have to think different. You'll have to act differently, and a different set of businesses might be the leaders for the next leg of the market over the next 3 to 5 years.
All right. Hi, Rushabh. Good morning. This is Shrishti also joining in. So let me start by asking you, what new are you looking at? Because we believe that you have been holding your positive stance in pharma, which could be the next big consumption driver for the next 5 to 10 years. Telecom is another space. But other than that, what's that is catching your eye, and what's catching your attention right now?
So I think payments is a big opportunity. There are a few companies listed in payment space, and we own some of them. We believe that more companies will get listed. It's a decadal opportunity. The whole industry is growing very rapidly because of UPI, and our sense is that that's not going to change in a hurry. So from our perspective, the digitization and the UPI is going to lead the growth in payments over the next 5 to 10 years. So we believe payments is a large opportunity. Similarly, I think the speaker before me was talking about HDFC Life. We like life insurance. We believe life insurance. There was a lot of noise out there. Has been a lot of noise over the last few years regarding various regulatory interventions. However, we believe that the structural opportunity in the business continues to be very large. The business is consolidating. The top 4 or 5 players control now. If you exclude the PSU, LIC, I think the top 4 or 5 players are consolidating the markets, and I think that's going to be really a big growth driver for them. Similarly, in payments also we see consolidation. So, these are markets where you are seeing consolidation, the top 4 or 5 players controlling significant part of the market, and a significant long-term opportunity in the market. You can't get better dynamics than that.
Sticking with that theme, Rushabh, within payments, just wanted to check upon, are you still holding SBI cards in your portfolio? Because I believe that was one such theme that you were driving. And given the other players, that the kind of competition and the kind of tensions then those players were facing, SBI card was indeed the winner. But what's your current take now?
No, I think if you look at the credit card market, penetration is about 3.5-4% of the population. Very long way to go. Top 5 players control 80% plus of the market. So highly consolidated. The top 4 or 5 banks control pretty much the whole of the market. And if you see what's happening with UPI, so people didn't understand, but UPI will be a big long-term driver for credit cards, because if you look at what the RBI is doing now is encouraging more and more of credit cards to get linked to UPI. Instead of directly the bank accounts. And I think that is going to be a huge long-term driver. So you have low penetration, high consolidation, very, very strong parentage in terms of the guys who are leading the industry, and a very large opportunity. And it's not a small business. I mean, if you look at SBI cards, it's a 2,000 crore profit business even this year when it was a difficult year for them. So it's a very large opportunity with very large companies kind of really going after those opportunities. Again, as I said, very, very good dynamics for the business.
Rishabh, so you spoke about payments, you spoke about insurance. Suffice to say, the fact that you need to look at different themes, newer themes in this next leg of rally in the markets. What about these narrative stocks or narrative themes that we were actually playing out, that was playing out in the last 1.5 years or so? Case in point being the entire rush or sugar rush that you saw in the PSU space. What's your take on that? Do you think now is the time that these narrative stocks or themes will take a backseat?
No, my sense is that, look, narratives are only good for a while. The problem is eventually the businesses have to deliver, whichever company it is, it needs to deliver. You can't keep buying businesses on hope. You need to buy businesses based on free cash flows, based on, what kind of, ROIs they are generating. Therefore, I think we are very careful and mindful of crowded trades. Our sense is that a lot of trades in the last 2 years have become very crowded. A lot of retail participation, as you rightly said, narratives driving the stock prices rather than fundamentals. And that's really where we need to be very careful. And therefore, what it does is it opens up opportunities on the other side, where there are a lot of companies which maybe the narrative is negative and kind of gives you very good opportunity, which is what we saw in maybe SBI cards second half of last year. The narrative was negative, but we saw a very good opportunity. So my sense is that we try to stay away from crowded trades. We try to stay away from narrative-driven businesses. We are more looking at companies delivering stable, predictable cash flows, but also at a reasonable price.
Right. Rushabh, you've often talked about as to how you prefer even telecom as a sector, but what's the best way to play it out? Because it's a very limited, listed pool. Is it via the service providers or some other?
No, I think the frontline guys, I mean, you have to play telecom through frontline. I don't think so. We want to play it through a secondary thing. I think the larger, bigger guys will keep getting bigger and bigger. When we bought Bharti 4 years ago, and to today, Bharti has become a top 5 market cap company. Similarly, we believe Tatacom playing a very different opportunity in telecom, more a global opportunity. So my sense is telecom is a big boys business. It's not where you play through secondary things. And our view still remains that it continues to have a very large opportunity, both domestically and for somebody like Tatacom on an offshore markets case. So, and also these companies have started to generate significant amount of free cash flow. I think people are underestimating the kind of free cash flow these companies will generate over time, and that kind of will be a game changer. I mean, we have not seen these kind of free cash flows being generated by any company in India. I would say Bharti would reach that point where they would be generating maybe $3-4 billion of free cash flow, and which is unheard of in India.
All right, Rushabh, but we have to get to this fact that there's a general sense of optimism in the street with respect to India's economic growth. Given the fact that banking was one such space that most of the investors were liking for quite some time now, but I believe that within banking, you are very much skewed towards the payment side, the theme that we just discussed. But other than that, Rushabh, which other theme or sector could be the best proxy play right now to play the India growth story?
I'm sorry, but I'm repeating it, but payments, I mean, you need payments for everything. Any consumption story in India will need payments. You need insurance. I mean, everybody, we are underinsured market. Clearly, you need insurance, and it's a very, very difficult business from a perspective that it needs huge amount of distribution capability, on-ground presence. I mean, just to give you an example, one of the companies that we own is spending 300 crores on technology over 2 years. I mean, imagine the kind of moat they will be building. Small companies can't even afford to dream of this. So my sense is technology in a lot of these consumption plays will become a huge entry barrier. And technology is on a J curve right now. So companies that can invest in technology will start building significant amount of entry barriers to their business going forward.
Right, Rishabh. So you did speak about payments. That is going to be the next theme that you are very confident about. Now, payments, insurance as well that you've spoken about. You like telecom, you like pharma as well. I wanted to understand what's your take on power sector, given the fact that everyone's of the view that given the fact that India is on a curve of growth going ahead, power will be one sector that will actually aid the growth going ahead. Are you of that camp or are you not?
Power will be needed. I mean, India needs power for sure. I don't think so. There is any doubt in our mind that you will need huge amounts of power. A lot of people were saying, renewables. Renewables is going to be a big play, but I think you will still need all kinds of power to kind of chip in for the India growth story to play out. So you will need coal, you will need nuclear, you will need pretty much every kind of power generating asset to kind of play its role over the next 5 to 10 years if the growth in India plays out the way we are expecting.
Rushabh, so good to have you on the show. Thank you so much for your time
Thank
today.
you
It was
so much.
great chatting with you.
Thank you so much.
Okay, let's just revisit what the market then is.
If you like this video, then like, share and subscribe to ET Now.